Hey guys, this is Shaun, and in this video, I wanted to go over how do you accurately draw support and resistance levels. There's nothing magical about support and resistance levels. Uh, just like anything else in trading, nothing is 100% accurate, right? Or 100% that you can bet your money on it. So there's still a probability. And when it comes to support and resistance levels, they tend to be more reliable because we are drawing these levels as a trader based on previous price action. So what the price has done, how the traders have actually acted as when the price reaches a certain level or certain price, and maybe a lot of sellers came into the market and then price couldn't break further through that price, or price actually started coming down, and a lot of traders or investors got really interested at of the price and started buying at certain levels. So we are able to identify that, especially if you're using candlestick charts. So we are able to identify these levels that there is some sort of activity happened previously, and there is a good chance that that activity might happen again, or some form of activity might happen again in the future when, as the price is actually moving forward. And this again, coming back to the nothing magical about support and resistance levels, they actually tend to work so well because every other trade, or maybe not every other trade, but a lot of traders actually like to rely on them for their own trading, and it's become self-fulfilling prophecy. If everybody's doing something on a particular thing, on a particular level or a particular indicator, it tends to just react with their prices, so it just becomes more reliable because everybody else is doing so in this video, let's actually dive into the charts and see how do you actually draw these support and resistance levels, and after that we're going to go over how do you actually use them in your own trading, whether it be swing trading or whether it be day trade. But I'll be talking a little bit more about from the day trading perspective of it all. So I'm actually just gonna take an empty chart. So just to go over it a bit better, first of all, let's actually go over SPY, right? So if you might actually see a lot of my levels are already made over here. So if you just look left on the chart, right, I'm able to draw these levels because of these price clusters. You see the price comes over here and it sort of fades away. So this is the very first one we're looking at. And I'm trying to be more accurate with it, that I'm drawing these levels based on these wicks. So let me actually see a place on the chart where I have a lot of wicks or I have a lot of candle closes. So when we're looking at the chart, right, to make these levels, candle closes, right? I mean, if I just zoom into any candle, let's just say for visual speaking, so this can be closed over here at this particular level. So this is actually very important. One candle close. And second thing is important is these wicks, because price came over here and immediately rejected. So this is what I want you to focus on when you're trying to draw these support and resistance levels. And when you are focusing on these areas, and then there's a cluster of them, like over here, price comes in, couldn't close, or basically close over here, and if you just look at over here, just cope it and we just can fade it. But and you know what, it's never going to be accurate, exactly accurate prices like 58408. It's never going to be exact prices. You have to give it some room for fluctuation, some room for it to sort of disrespect the levels and then sort of come back. But overall, you're looking at this, right? It couldn't close higher, it came over here all the way, but it got rejected. So at this price, this candle, right, it opened over here, went over here all the way up to 584.33s, instantly it rejects and end up having a negative day all of a sudden. So these sort of extreme things you're looking at, either wicks or either can closes. And if you find a cluster of prices like this one over here, it's a small cluster, right? And you can accurately draw your lens over here because of these clusters, right? That is what you're essentially looking at. And to have a reliable level, you would at least need to have with 3 of these clusters, or 3 points, or 3 times the price has sort of gone over there, 2 or 3 times. So to be, it's not like a static formula that you need to have 3 or more, but it generally means that traders have tried multiple times to break through that level and failed at that price. So this is what you're actually looking at, the behavior of the price over here. So this over here, it's a very extreme wick, again a cluster, and if you move a little bit forward, prices dip, start taking some support over here, right? So these are the sort of things you're looking at. Now actually, let's find an empty chart, because I don't want to mess up my drawings on this Spy and other few charts. I think I haven't traded Microsoft in a while. No, I have. So May Apple, right? Let's actually go on Apple. So how I would go about drawing these levels, right? So very first thing I can see is this point over here as an extreme. Price immediately comes over here and rejects, and then we have a complete downtrend of that. And just to have a second point, this is the second point where the price comes over here, fails, and then third time the price on the way and fails. So this to me would say that this is a price that buyers or sellers, or at least traders, have previously behaved in a certain way, and this level could actually be of importance. So I'm just going to quickly draw a level, and if you just look at the same thing for the downside of things. So I mean, I'm also just visually looking at it, and just holding a mouse up makes it a bit more easier because I have some visual. But yeah, let's see this one. The candle hasn't been able to close, but if you just look a little bit over here, it wasn't completely aligning. Might not be the best thing, but if you go a little bit forward, you know, these sort of wicks are starting to align a bit better. And if you look a bit more forward, go a little bit more further in the chart, there still seems to be respecting, and so on and so forth over here as well. So this to me would indicate that it is a reliable level. Well, yeah, they can close. I might want to draw a level over here, just so here. So it seems to be this extreme wick was actually a lot more, valuable, or at least traders were actually looking at this more, moving forward over here. So you see some sort of activity away. This one again, this one again. So this is how you actually just draw supportive resistance areas. And another point over here would be this. There's some extreme price movements over here, and this level is some reactive. There's a lot more reaction about these levels moving, even if I keep looking right on the chart. So for next time when the price approaches over here, I might be paying more attention to this one. So right now, as you can see, the price, even yesterday's price, couldn't close below this level. It sort of stopped over here. Now, if I were to trade this stock today, first thing what I would want to do, have a lot more activity and elevated volume for me to actually trade it. But let's just say we had that. All I would look for is for the price to actually break below these levels. And if it does break and give me a reliable breakdown, because it's just breaking to the downside on elevating volume, if that is something reliable, then I might just want to look at the next level and target these next areas. In this case, I think I might want to go as a day trader. I might even want to go as a on the 30-minute chart to even be a bit more precise with my levels. But even if you go on 30-minute chart, the same exact levels that we draw here, you see the price action and you see the price activity a lot more clear and cleaner. So all I would look for when I'm actually trading with these levels, and it's kind of consolidate. If it after consolidation breaks down on elevated volume, then that's a really good trade for me. I might actually going to take the trade all the way to the downside. And that's how you essentially use the support and resistance lines there. And they tend to be more reliable because traders are not relying on an indicator, which is a mathematical formula at the end of the day. It's something they can see that traders have previously behaved, and prices tend to have memories. So this is what makes it reliable, and this is how you actually use or draw support resistance lines over here. Just based on looking at the extremes of catalytic closes and wicks, right? And 3 touch points on a chart tend to be really good, reliable sort of source of information that you can rely on. And take a trade based on. There you have it, guys. It was just a quick tutorial on support and resistance lines and a quick brief on how you draw them and how do you actually trade based on them. So hopefully you guys find it valuable. If you did, consider hitting the like button and subscribe to the channel to see more trading related content like this one. And I look forward to seeing you in the next one. Take it easy. Bye.